12th of March, we had the Bank of Canada interest rate decision. Now, the reason you should read interest rate decisions is to find out what the bank is focusing on, because what the bank is focusing on, the market will be focusing on. So in this interest rate decision, Macklem said that the Bank of Canada were quite happy to cut interest rates to 2.75% because they expect tariffs to weigh on the economy, that they expected the Q2 GDP data to be weaker than expected, and they were happy that inflation was around the sort of the 2% mark. So straight away, that tells us that if we see inflation moving in the wrong direction, coming in above market's maximum expectations, that's going to be contradicting the Bank of Canada's confidence that inflation is heading back towards the 2% area. It's around that area. If you look at the data, you can see that the headline is at 1.9%, core's at 2.1%, but the trim mean is 2.7% and the median is 2.7%. So that, you know, those preferred measures of inflation, they're not quite there yet, but close enough. But by focusing on what the bank is focusing on, you can then know what the market is focusing on. So straight away we can tell that moving forward, growth prints from GDP and inflation prints, especially if they come in out of consensus, are likely to move the market in a strong way. So that's how you can read bank statements and see what the market will be focusing on from them.